I heard a little bell.
What was the bell?
I don't know. The bell was.
Do you
Ding,
trust
like
your
the
crypto
market's open bell?
assets to centralized exchanges that actively sell your private information and front-run your trades? Would you like to buy and sell your assets without any middlemen, intermediaries, or robots? Do you like paying slippage, fees, and having the price go up as bots steal from you on low-liquidity decentralized exchanges? The solution is rejuve.ai. Set your guaranteed buy or sell price. No middlemen, no slippage, no bots, ever. Buy or sell 1, 10, or even 10 million tokens, and you never have to worry. OTC trades are between you and the seller or buyer, guaranteed by audited smart contracts and no human middlemen. Nodemarket.io.
Buenos dias. Buenos dias. Okay, I'll tell you. We'll just get right into it. There's a lot going on. Do we have any housekeeping type stuff before we get into the guts of how the markets all got gutted? Wait, Brandon. The dude that you sent me those messages, those screen captures from Twitter.
Oh, you want to share that real quick?
Don't you think as a cautionary tale?
Might as well. This is interesting. Oh, what the heck is happening again? Did they just announce? It's like when you see Ethereum gas spike like it is right now again, like something got mentioned somewhere. It's just funny.
Well, part of the, just so people know, part of the ETFs that got launched were spot Bitcoin for Hong Kong. Apparently, we don't have the official word, but in Hong Kong, it's also some spot Ethereum ETF as well as Bitcoin.
Oh, they didn't get launched, did they? They got approved today, right?
Well, they're not officially approved. They're unofficially approved.
If they go through and do certain, regulations and stuff like that, if they meet all the guidelines, they're approved. Yeah. Which, anyway, so interesting. I'll share that. Let me see. Hold on a second. Let me find that one. Oh, that is right here. This guy. So we've talked about leverage a little bit, and I had to explain this to my wife even more so. But this guy has been working since 2017 in crypto. For some reason went, and this is not a spoof. Some people Photoshop these and put these on Twitter, but after going through and kind of researching this guy and his history and his wallet, I did a lot of research before I wanted to show this on screen a little bit. I really think this is a real story. I did cut off part of what he tweeted out because I don't think the rest of it's very savory. But we have.
Wait. What do you mean? What do you mean unsavory? Go on.
I don't want to put it on the stream.
Is it like some S bombs and stuff?
No, an S bomb, but not the one you're thinking of.
Is it some pity bombs?
No, it's just I don't want to put it on stream. I'm sorry. This guy is not happy with his self. Anyway, so basically, he woke up. He was 3x long Pepe. And when you're 3x long something, the market only needs to go down 33% before you're completely wiped out, if you do the math, right? So it doesn't have to go down 100%. It only has to go down a fractional percent. So the more X long, the less it has to go down. It gives a higher upside as well, but obviously the downside is dead. And so when this cataclysmic type we'll call it a mini black swan, and we can go through this later in the show.
Mini swan.
But a mini black swan type event happens. Pepe, your altcoins are going to drop first. And you saw this over the weekend, and everybody even emailed me like, why are the altcoins all down and Bitcoin's all down 6-7%? I'm like, well, that's because the altcoins, that's where all the retail investors are, the people like this guy that are sitting there over leveraged on their hands that are just new into crypto. You saw this with like GameStop. Once somebody starts selling, the domino effect is huge. So this happened obviously in Pepe. We had a bigger sell-off. I think Pepe probably dropped like 30%. Anyway, this entire guy's portfolio, you can see here of $1,148,000 got completely wiped out overnight. He wakes up the next morning and he's completely gone. He's like, how did this happen? Well, you were 3x leverage long. This happened to billions of dollars over the weekend. And we just leverage in crypto is so dangerous. Obviously, the allure of it is so high because you could make so much money. But honestly, it only takes on a 3x, only a 30% drop. And if you're an altcoin, that can happen like that on any altcoin.
The thing is, it depends on the platform also, because as these things start to deteriorate, they start pre-selling your position. You don't get to go, oh, well, we'll go down. I can get all the way down to 0 and still hold. No, because they don't want the position to go negative. They're not going to let it go negative. So they start, sometimes on these platforms, they start liquidating on the way down.
Yep.
They don't just wait.
Also, the platforms are a little sketchy. KuCoin, for example, they will overdrive. This is what this one says. Over the word they use. They overdrive their prices. For example, on KuCoin, this Solana, they wicked all the way down to 110. In no other chart anywhere else did Solana drop that far over the weekend, except for KuCoin. And the reason it dropped that far on KuCoin is because somebody had a bunch of leverage longs down there, and they just went and wicked the crap out of them. Legal? Meh, who knows? But that's what happened. It dropped 9.5% more on KuCoin than it did on Coinbase, which you're like, what? So if you wake up and you're like, oh, phew, Solana only dropped to 130. I'm okay. And then you go log on your KuCoin account and you're the one that got sold out at 110. You're like, what the crap? Well, that's what happens because you owe them money. Once you lever, you're like a slave to them and you owe them money. This isn't like me where when all this happens, I sleep fine at night because I don't owe anybody money.
And I don't think people understand either. When you're leveraged long, you have to pay for the position. It isn't just that you get that leverage and you just hold it and see if you win. You have to pay a funding rate. That's how they keep the books straight. If there's too many people long and no one's short, the longs have to pay a funding rate. If it goes the other way, the shorts have to pay a funding rate. So imagine like you're kind of borrowing from the future. You're borrowing when you do leverage. You have to service that leverage. So you can look at the funding rates, and when the funding rates get up above about 0.15, it always spells disaster. That used to be one of the only things, or one of the first things that we looked at in like 2018, 2019, going into 2020, especially 2021. You just watched funding rates, and when funding rates got big, now it happens like every other weekend. But it used to be these kind of events were once every few months because people would get too excited or they get too negative. And the funding rates would start going up, and you're like, man, if the market flattens out and you're leveraged and you're having to pay for that leverage, at some point you get wiped out, because what they do is the funding rate is implied against your account every 8 hours. And they just take a little bit. Every 8 hours, take a little bit. So you think about it, if the funding rate is, say, 0.15, that means every day you're losing almost 0.5%. You're losing 0.5% in a leverage position. Now, if you have 100x leverage position and you're paying a funding rate, one, that's expensive. Two days in a row of flat markets, you get liquidated. The whole thing's gone because that is more than 0.67. Because remember, so you're at 0.15 times 3, so 0.45 times 2 for 2 days. So you're at 0.9. So you get liquidated just servicing your own leverage.
Yeah.
So anyway, obviously people try to manage that, but so there's a lot, the demon is in the details, so to speak.
Yeah. I mean, this is one of the safest assets to borrow. And this is just an example, but ETH, if you're going to borrow ETH, which is, I would say, probably the second most safest, stablest-ish of the assets. This isn't even altcoins. To borrow on this one's 24%. Per year too, on top of everything else. That's just if you could do a 3x. That's just a 3x leverage borrow. So
think about that.
Yeah, I know.
2% a month. It's 0.5% a week. That's only a little bit less bad than the funding rate was.
That's what I'm saying. Like 20, who's gonna pay 24%? You better be right, and you better be right, and you better be right, or else you're wrong. You're wrong.
So right. So right.
or it leads to situations like this. So.
Over $1 billion. I think it was when I looked last yesterday morning, it was over $1 billion yesterday morning. So that had to be more. It's funny. I had a friend of mine and they were like, oh, my aunt told me to start, how'd they put it? My aunt is a Wall Street trader and she's telling me how to trade Bitcoin options on Binance. I said, none of those things are true. What? I said, there's not one thing you just told me that's true. What the truth is there's no aunt. You either bought some stupid course or some junk on YouTube, or you're listening to someone on Twitter tell you how to buy and sell through leverage using a VPN on Binance, and all your money's going to be gone. And then they're like, no, look at these screenshots. And I can tell they're obviously like the same crap that people put on Twitter, like, look at the money I'm making and it shows like Bitcoin. And I'm like, I can read this, right? And they're like, what do you mean? I'm like, well, it says the price of Bitcoin went from 64,000 to 63,996. That's $6. You didn't make $6,000 with a $6 move, because while Binance might have 100x leverage, they don't have 1,000x.
1,000x leverage, yeah.
And it's each one of the trades was like a $6,000 win. I'm like, those numbers are not true. What you're saying is not true. No response. And then I got a message later on, because obviously their whole thing was my aunt told me to short. And so I said, oh, okay. Well, Bitcoin went up. It touched 66,000 and change. So those short positions, and I said, I didn't say anything. And then later in the day, I got a message that said, you're being very hostile. And while that may be true, it doesn't change the fact.
Hostile, but you're right.
Yes, but
so it's your approach that they're really gutting. It's the way you present things.
Yes, okay? I'm going to do my best from here forward to not use profanity much. That it's kid safe. Our content will be child safe.
So I can tell my kids to turn it back on.
They can turn it back on. The F-bombs are out the window, unless I say F-bomb.
But F-bomb's safe. That's fine.
Or truck. I can say truck.
You can say, we'll get a list for you. We'll get a whole list. It's approved language in our house. Yeah. We got so many kids running around here. It's approved language, right?
There was a video game one time, and one of the guys was like, cluck you. He was a chicken who would box. You would see like, cluck you. I was like, I like this chicken. Anyway, so yeah, I will endeavor, as with all personal pursuits, I will endeavor to use no profanity, or at least less.
Yeah, that's fine. Well, we have a ton to talk about today. Obviously, no more housekeeping really. Well, we have a lot of okay. Oh, actually, let's talk about this, because this is behind the scenes. This is hypercycle stuff. A lot of people I've had 3 emails asking, hey, so do we think Toofy's going down the same line as Ben? I'll let you answer that, Nick, in a second. But the other question that we are getting a lot of is just about hypercycle and stuff. Obviously, there's so much going on, guys. But I don't want to like overpromise, underdeliver, but we have some things in the works here that should be really good for hypercycle. But I just be patient for that one. So what do you think about Ben Toofy?
Well, to smooth the edges. Oh, by the way, we're going to be doing a recording. I'm going to have Ben and Toofy talk on a show. We'll record it like a This Weekend Singularity Net, whatever. Right. And it's going to be Ben and Toofy, and I have agreed to be the unopinionated mediator in this discussion.
Maybe I should moderate this.
For those of you looking like, oh yeah, it's going to be good. No, the only way, and this was not 2 things. One, this wasn't my idea. I actually turned it down. I said, I don't want to do this. And then one of the other people were like, why don't you be the bigger man? And I was like, Ooh, that's true. Okay, I will do it. Bigger man. Anyway.
And then you just proved them wrong. They're both like, or no, just sorry. One of them's like,
okay. Yeah. So I'm gonna bigger man it, and I'm gonna mediate, arbitrate, let them discuss the future of AGI. Let Ben dance around whatever he will dance around about ASI. But what I would say about this is those two fellas are on complete other ends of the spectrum. Toofy's building a business. Ben is doing what he thinks he must do, as far as he's admitted to achieve AGI. And while he may do it, if every other company and every other researcher in the whole world doesn't, but Ben does, and the whole other world doesn't do this thing that they're all working on with hundreds of billions of dollars at their disposal, Ben's going to go sell some tokens at a swap meet somehow and build a large language model. Anyway, so whereas Toofy's just building a business, Toofy's not saying, I'm going to achieve AGI. Toofy's not saying, we're going to do this, we're going to do that. We're going to be the rails at Hypercycle. This is Toofy.
Picks and shovels, man. There's so much stuff that Hypercycle's doing to facilitate everything else that everybody says they're going to do.
Yeah.
Simplicity in all things.
Everybody says, I'm going to build the city of gold. Great. Hypercycle is selling picks and shovels and building highways. Like, here, come on. Here's the real estate. Go do what you do. We'll help you guys all out. So that perspective is just a completely different perspective. The twin team is more in line with the Toofy mentality. Build a business, build utility, build vaults, build a real world reason for these twins to exist, find ways to monetize them, find ways to make it easier for businesses to function, having these twins as a part of their kind of business culture where a client, a consumer, an executive, a C-suite executive would train a digital twin as they're working their way through their career. And if they ever have to exit, that twin is still there. It can onboard the next person to fill their shoes, or it could be left there after their retirement as a utility and also earn that retiree some cash. So there's all sorts of ways the twin in a business to business and in a consumer to business, consumer to consumer way can function that has nothing to do with achieving AGI, because that might be like unifying all the forces in physics, which might or might not be possible. And so that's kind of one of these things where, like, for all the good intentions and the background and the career of Ben, it just might not be possible. There is a point where it does matter if these companies, go down your list of like all the top 6 companies that push the S&P 500. There's a reason why they are, many of them, $1 trillion companies. They have a lot of firepower at their disposal. And I don't care how many computer chips I don't care how many servers you set up in your garage, even if you borrow your buddy's garage. There's 2 of us now. You're not competing with these companies. You're just not. You say, well, my algorithms are better and this is a smarter way. Cool. You're not competing with OpenAI. You will not compete with OpenAI. It's just not realistic. So what is a more realistic way to look at it is, okay, what if we could enhance what they're doing? What if we could look at their research, admit to ourselves we made a faux pas the last 20 years of our career. We went down the wrong path, but we have a lot of good research that could be employed over here and maybe make a substantive difference by leveraging them, like these, the opposite of the idiots on Binance, right? A good kind of leverage where you leverage the training and experience and firepower of these companies. Go to them, take your hat off, your wizard hat, go to them like with your hat in your hand and say, listen, we'd like to contribute. How can we work together? Instead of, well, this is how we'll compete. You won't compete, I don't think. I mean, Brandon, and maybe I am taking an unnecessarily sturdy stance in this. Do you think that these guys can compete with the economic firepower that these other companies have? Do you think that, I mean, what's the road for Ben and that team?
I mean, it's tough. Their only selling point is Ben and his knowledge base, but their burn rate, we talk about burn rate, not much. We talk about it in the Web 2 world, but if they're going to compete against the Web 2 world, then their burn rate is going to be so astronomically high to compete against these companies. I don't think they have the runway for that, nor do they have the teams in place. If you want to compete against Microsoft or OpenAI, they have a team of 30,000 people if they wanted to. At this point,
even Anthropic. Matter of fact, there's a guy that left Anthropic. Okay, so OpenAI, people left OpenAI, people left Google DeepMind. I think it was the DeepMind guys that started Anthropic. People left Anthropic. A guy left Anthropic, started a company. It's already worth $1 billion. It's a dude and like his 4 friends.
Here's the thing.
They already have more firepower than Singularity Net. All of it. Those 4 guys.
If they adjust their vision, if they adjust their scope, right? Not to compete with, but to facilitate in some way, I think that could be their better path to get to where they need to go with less of a burn rate. Just like, for example, True AGI could be doing. What they're doing is they're partnering with these companies to help facilitate where they're trying to get as a whole, which, that's everybody wins. Who loses in that battle? Nobody.
And I'll say this too.
When you compete,
I'll say this war. All this stuff that I was not happy about with what the merger of the creation of the ASI token, Fetch, Ocean, and Singularity Net. All of this behavior, I don't think I would mind it in a business sense on an equity play, where the whole point of the company isn't to be fair and decentralized and open with open community participation. But you can't do both. You either have to be a scrupulous corporate assassin or open, decentralized governance by the people. You can't claim this one and do this one. You just can't. So this same kind of behavior on the other side, I wouldn't even mind it. I'd be like, ooh, these guys are tricky. I like this. This is going to make us some money. But when you have a system where you say the people matter and the people's opinions matter and the voices matter and the votes matter, you just can't rig it all the way down the way and do everything in secret. You just can't. So I think maybe good tactics employed the wrong way. It's like a bunch of parents get together and have a game with their like pee-wee football, with like the 4-year-olds and the 6-year-olds, and the parents start like tackling the little kids full power, like just planting these kids, spiking them into the dirt and stuff. You're like, whoa. Well, that's not what this is. This is like, we didn't. So I just think it was maybe tactics employed for a different kind of business landscape in the wrong way. And I don't know if I don't know. Anyway, we won't go down that whole path. Like, I just don't know if there's any way that Singularity Net, regardless of what this merger does, and it might be great. They might be worth $20 billion and it's in the top 15 assets or something like that. And that's great for optics and all that. And it's great so that executives can exit and do all the things they want to do. But I don't think that I don't think that gets us any closer or gets them any closer to artificial general intelligence. And then on the other side, and just to put a button on this, the beauty of like Hypercycle is Tupi doesn't care who achieves AGI. He's not competing with anyone. He's literally not competing. He's not even competing with other people that offer AI compute. It is a big, giant pool of opportunity. There could be 100 companies in there, all taking 1% of the AI compute, which is going up in demand by 100x a year. So, okay, you only got 1% of a pool that's expanding by 100 times a year. Still a lot of currency units floating into your pocket. So it's just a more business focused way. I am kind of curious what that discussion will be like for those two. My guess is it's going to be a lot of dithering and pivoting, and you'll leave the discussion more confused than when it started. That's my guess. But it'll be here first on Digital Investor. Okay, Brandon, before we go behind the wall, is there anything we need to talk about? Yeah, the Hong Kong thing we kind of talked about. Basically, it's that it's an Ethereum ETF. It's a Bitcoin ETF. They kind of have the green light. It's not super official yet, but they kind of have the green light. We'll see what that means as the days and weeks move forward. But it was definitely good news out of Hong Kong. Good news.
I think it's good.
Good news.
Now let's go behind the wall. Let's talk about real market stuff and game theory behind what happened.
What is that snorting he does? What is that?
The tick.
No, it's like a thing.
Yeah, but is it like a tick or is it actually?
No, it's not a tick because I've talked to him before when he doesn't do it. I don't know if maybe his throat itches, and is that like a thing? Can your throat itch? Is that even a thing?
Maybe regurgitating
on the inside, maybe like an inner throatal itch or something. Yeah, maybe allergies. Yeah, it's creepy. I know we shouldn't make fun of people's physical infirmities or foibles, but that's a weird one.
Yeah.
Okay. Now I want to do it. Now it's fun, actually. It's kind of fun. Oh, well, yeah. I mean, that's the assumption, but like that much? How much can you be? Like a gallon per hour?
A gallon per hour.
Oh, and real quick, has any Civil War was really good for anybody that didn't but it's not a show for kids. It is not a show for kids. All right, and on that note, let's get behind the
Let's
talk
wall, about what happened. Let's talk.
Okay. Well, the good thing about going behind the wall is
here we go.
Wait, what?
It's just good. Yeah, we'll just wait till you start telling a story about what's going on in the market and why this happened. Then I'll shut you off. That's all.
We'll get there, buddy.
No, we're going behind the proverbial wall now to continue the broadcast privately for the digital investors and digital private clients. If you'd like to join us, simply go to nickblacknext.com and subscribe to one of our plans and immediately take advantage of our library of tools, tactics, and information. It's all designed to help you learn, grow, and manage your portfolio like a pro. Join us now.